Hi guys, it's your boy Ofentse Ledwaba. Once again, I know guys I've been away for a very long time, but worry not, I've just been busy taking care of business and also making sure that the content that I'll be producing for you guys will be much more valuable. And also guys, please do not forget to subscribe and click the like and share button so that other members as well can be able to get much more information. So today I'll be giving you guys much more information about the US30. You'll be able to understand how to trade the US30 and how you can be able to see some of the movements and also be able to understand that it is an indices, and also you get to understand that whenever you are trading an index, because it's so volatile, you need to be on your toes. You need to understand what is happening, especially with the news coming. But with the price section, I tell you, you will never go wrong. You will understand that whenever you're wrong, it's that time whereby you know that you can never win every trade, but you'll be able to maximize your profits. Your profits will exceed your losses. So with that being said, let's not waste much time guys. Make sure you stick to the end of the video so that you can see clearly and some of the value information that you can get for free. Join me into the charts. Welcome to the charts guys. I'll be looking at the US30. I'm just gonna start by clearing the charts so that you guys can be able to understand and be aware of how I managed to simplify everything. So now I'm just gonna go to daily. With the daily, you need to understand this is the utmost time frame that you see long-term movement, because you understand that on the weekly it's a bit further for you to be able to put your analysis there on point. So basically, look at what is currently happening. As you remember that the trends, you need to be aware of where the market is going, and you need to be aware that you need to follow the trend. Don't force the trend to turn if the trend is still continuing to the downside or it's continuing to the upside. You need to be aware of those characteristics. As you can see, I'll just show you a typical example. You can see here we are having two touches, and this is our highest point here. Use this one. You can see the market reached this point and then rejected and came to retest. So this was basically a retest level. See this? It was a retest. It was a confirmation that we are going to the downside, because you see here we have an impulse move, then a certain retracement, then a retest, then continue further down. So look at it this way. Once you practice this, you'll be able to understand how the market moves. As we know that the indices, their all-time trend will be to the upside, because you need to understand this a group of companies, and also no investor or no CEO will be happy with their company going down. But there's a certain scenarios whereby news or their losses within the company force the indices to shoot to the downside. So what really helps us is that we use pure price action. We are able to see those certain movements before the news are announced. We can see them on the charts. For example, you get scenarios like you get a double top, or you get rising wedge showing you that the market wants to retrace or reverse at this level. So look at what I'll be looking at now. I just want to show you guys how to trade the US30 market. Can you see what is happening here? You see the market was trending to the upside. All we're going up. This is just a retracement down and then shoots back with an impulse to the upside. You can see. So I just want to show you guys. You see, even here, so minimum of touches, as you can see, will be 1, 2, 3. So minimum touch of 2 picks that line must touch. Okay, so let's make it simple. So now you understand how the market moves. As you know that when we are shooting to the upside, we'll use this, and then we'll have scenario like this: correction, impulse, correction, impulse, correction. Understand? So basically that simply means we'll be buying here, buying here, buying here. Okay, let's make it simpler now. So now I'm gonna start analyzing and identifying my structures, because I can see the nature of the market. I just want to show you guys how we managed to capitalize on this downward movement. We had this level, you can see. Remember the market was somewhere around here, and then I can see we are having this. So at this level, I could see that we have broken our line. We've broken our line, and now if we break this, that means we have to wait for a retest, and then before we shoot to the downside. So let me go to 4 hour. There's this type of a scenario. We are having 1, 2, 3, whereby the market was shooting to the upside. So basically, as long as the market is just above this line, we are going up. But as soon as it comes below this level, we have to wait for confirmation before we can say it has broken. Now it's going to the downside. Okay. Okay, now we can see that we have broken out of this line. So what's next now? We need to see what is something that's going to tell us that we need to shoot to the downside. As you can see at this point here, this zone now, it becomes some sort of a resistance zone, meaning that as long as price is playing below this, it's rejecting, we are still shooting to the downside. But you need to take into account that you need to look at your market chart patterns. So as you can see, it's not visible here on the 4 hour. Then I'll go to 1 hour. By 1 hour, I can see we're broken, and then we are testing this level here. Now, this looks like a ceiling. As you know that in my previous videos, I've mentioned to you, trying to explain to you, when a zone is above your price, you look at that as a ceiling, and then when the zone is below it's below your price, you look at it as a zone as well. Most people use it as a support level, understand? Me looking at this scenario, I can clearly see that we are failing to reject. You can see as well this candlestick formation. This candlestick formation. So everything that I've been explaining plays a part. You can see this candlestick formation is a rejection. Understand? Candlestick pattern is a rejection, showing you that this level is strong. The market is failing to break to the upside. And also we look at it this way, and I'll draw this. You can see by drawing this, we also, this looks more of a bigger correction. Just want to show you guys what really happened here, how you could have managed to get this entry here, be able to sell here. Let's go to 15 minutes. Don't forget, guys, you need to practice so that you can be able to see this type of structures with ease. Practice will definitely make you become a better trader and also analyze. Do you see what is happening? You see my line here, and do you see what happened? Look here. You see this level here. It retested this, then when it shot to the downside as well. You can see around this level here what really happened. Look. So how would you have known that the market will come retest here? You just have to have this line here, and then when it comes to retest, you can either add more entries. You can see it's relating to this point here. You understand? The market shot up and then retraced and then shot back up. So you can see this level here now becomes the new zone, because now we are below it. Now it becomes more of a resistant zone. So look what happened here, it shut down. Okay. Many people would want to understand how you could be able to see this. Okay, as I've mentioned, you have more situations like an M or an arc nature. So, but this one is an arc nature. It's something that looks like this. Do you see? So we are having the market going up and then retesting and then short breakdown. You understand? So sometimes it's not easy to be able to identify this, but you can make use of your trend lines to identify your market structures, and then you would know that at this level you will take the market down. Okay, so just show you here. Do you see? Do you see significant? And also another one will be this one. You see significant, same as this one, and then another one will be this. Making use of this line as it was shooting up, and then now it broke, went to retest this level, and then this level as well is communicating to this zone as well. So you would know that, okay, it's retesting, then you would know that now it's gonna shoot to the downside. And the 90% rule that we always preach about is the market will 99% go back to where the correction started. So you know that it definitely assists you knowing where to take profit or where to set your targets. And also, if you like to take early entries on 5 minutes, make sure you look at those small candles and be aware of what they are saying and understand their movements, because you need to be aware of the movements that are implied on the chart. The chart communicates with you. The chart gives you much more information that you can be able to utilize and be a profitable trader. So as you can see, I've just shown you guys how you can use the trend lines to be able to trade US30. You just need to make sure that your lines are positioned at the wicks, and also whenever you're drawing your zones, make sure the zones that it's significant, it has more than 2 touches. You can see at this level we are having 1, 2, 3, 4. You understand? Even though this one passed, it caused the mass psychology. Many people will think that it's gonna continue to the upside, but with us, we know that that's what the market makers do. They trap people on the wrong side, people continue buying, and then it comes back. You understand? So we tend to see those fake movements that the market tends to imply. Okay, let's look at another one. Once you start practicing, everything will become much more easy, because you'll just start to see with your clear eye. It will become easy as you practice. You can see. So this was just a sell opportunity, another sell opportunity. I just want to show you guys the significant areas. So you see what is happening here. So if you would have decided to sell at this level here, if you decide to take a reduced risk entry after the break, that means your stop loss would have to be just a little bit, and then 90% wrong where this correction ended. You can see we're having this correction, then impulse, correction, impulse, correction, impulse. Then you would have reached your target. Your target will be here. Target will be here. So basically, and you can see here, it certainly gave you re-entries. Entries here. So our stop loss will just be above this side and target here. So it will be here. Another opportunity. So the opportunities are there, guys. It will always present themselves. That's why I always tell people, don't chase the trades. Trading opportunities are like trains. Once you miss this one, another one will definitely come your way. Let's look at so the opposite of these movements will be you taking buy opportunities. And let me just try to show you guys how you would have been able to capitalize on buy opportunities at this point here. You can see the market is coming here, we're coming to retrace. You need to understand how to draw your chart pattern. So now we are having this chart pattern, a descending nature, showing us that it's preparing to shoot to the upside. We're having a descending channel here, and then as you know that we always use the impulse correction, impulse, which is the 1, 2, 3 formation. So basically you can see what I drew here, it's similar to what we are having on the charts. So you will have your buys, your first TP will just be here. which now becomes the 90% rule, beginning of the correction, then it becomes the end 90. So first TP, and then again you can either extend it as the market comes in your favor. So look at what is currently happening is the same as this one. So your entries would have been here, and then TP would be at this level here. This level, let me use a blue line. TP would have been at this level here. With that way, you can be able to see that, okay, I bought here, and then also you can be able to buy as well at the break, just here, because you can see now it gave us a bullish engulfing, then you put your stop loss just here. That's why I say candlestick formation is important, because now we can see that it broke with the engulfing candle very strongly, showing us that it's shooting to the upside. And then it reached our target, then continued. You see, it came to retest this level. Retest this level. So I would put my re-entries, the retest. I call it retest. Retest. Then create another buy opportunity here. Also, we are having this. So all I'm saying is that all this repeats itself, guys. You just need to train your eye and be able to see it when it happens, and also learn to place your stop loss in the right manner, because you understand, if you don't place your stop loss correct, you can see here we also reach our target, be here. We broke here and then we corrected here, so you can see we're having a flat. So if I were to buy here, let's take it at the break here, my stop loss will be just below here. And then you see it coming to retest this level here. So you can see this level, it's strong. You can use this. See, this level is strong. Now we are on top of the zone now. It's coming to bounce here. Coming to bounce here. Then we are having a hammer here. That's why I always say the candlestick formations are very much important, as much as the trend lines are important, because they give you the edge and you are able to understand that indeed the market will certainly go up from here, because you can see some would have seen this as a movement to the downside, but you would see that this is a correction. Will be a correction. And also understand that it won't always be in a book manner, because this is very volatile. You can see if you try to take this way, it won't give you a proper correction. But it is indeed, this is how it's supposed to be. You can see it's supposed to be this way, because you can see all these were just fake movements. They're just inducing people to buy here, and then it shut down. And you can see this one is a reverse hammer, a high test candle. So Whenever I see something like this, I try to make sure my trend lines is significant and is giving me enough information. So we can see at this level. Once I see the hammer, I know that it must shoot to the upside. If it doesn't, then I will be wrong. Then my stop loss will be just below this hammer. I'll take it. This target will be here. This target will be just here. And then once you see that the market is breaking, then it's correcting, making corrections and significance that is continuing to the upside. Use this flat. So this will look more like a pennant. As many people know how a pennant moves, you can see impulse, which is this is the impulse. Impulse. And then now this is the correction. Then we're expecting an impulse. So our correction will look something like this. 1, 2 at the bottom. Understand? So it's more of a diagonal double bottom. You can look at this as a diagonal double bottom because you can see price is rejecting this level here. So it's taking this as a chart pattern of some sort, and also you can see that you are having 2 points that are rejecting on this level. So this now becomes the double bottom. The double bottom is not only horizontal. This is the double bottom, and then this is also a double bottom diagonally. Understand? So this is what we are looking at here. We are having a diagonal double bottom. That's why the market shot to the upside. Then here entry. So with these scenarios, your reference point for your TP will have to be on the far left hand side, because you can see here we have nothing. So you'll have to use this one. Understand? This can be your target, your first target. And then if the market continues further, then this should be your second target. So always understand that you don't put your trades without the target. So you can see here, because most people get confused. How did you know the market's gonna reach there? This becomes your first target. Target TP1. This will be your TP2. And if the market decides to continue further up, this will be your TP3. Understand? But in this scenario, we reversed here. So guys, make sure you practice, and also please do not forget to like and subscribe and share with your friends, guys, so that we can make this channel grow and be able to share with the rest of the world. If you like to learn directly from me, click the link below on our website, and also click the link below to get a free price action book compiled by myself. There I give you the do's and don'ts of your support and resistance, and I also explain to how I trade. So basically, before you can enroll for the course, you get a free information, and also understand that we are really working hard to make sure that you guys get as much information as valuable as you need. Click, share with us. Make sure you comment below and share topics that you'd like me to share in the next video. Thank you for tuning in. It's your boy Ofentse Ledwaba. See you in the next video.